Testing 1, 2, 3. Uno, dos, tres, cuatro, cinco. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10. Sorry about that. So I had to reboot, and I run a server or a workstation, not a PC, and it always takes a lot longer to reboot because it has to run so many tests. All right. Okay, so need some charts. Two trailer park girls around the outside, around the outside. Stock market just opened. Dang. Positions look good. Little richer than before. That's always a good thing. Okay, got to reload all my other stuff. Un momento, por favor. Muchas gracias. The trader said, let there be light. I mean, let there be right. And then there is an MT4 on the right. Nice. And Windows is struggling. Hang on. And let there be left. And there should be left. Still no left. There it is. Boom! It's kind of funny, huh? Still not quite there. Hang on. Where'd it go? Well, let's try it again. Come on, MT4. Weather map colorful. You still see a weather map? No, you guys don't see it. Oh, you don't see my webcam? You don't... You don't see my charts? Hang on. Please describe what you see. You should see an MT4 account with pound dollar on 4 time frames. And right now, in fact, on top of that, you should see a giant webcam so that you could just see my trading platform just came back. All right. And now I'll make that nice and small. Okay. Yeah, very delayed. Yeah, plausibly. All right, so I need one more thing. I want to get my tradethenews.com back. Stock market opened a few minutes ago. Okay, so time for what? Counter trend moves? Is that what you're thinking? Okay, wonderful. Also, this is a great time. We're in our last hour of the webinar, and I'm open to any questions or thoughts or concerns about foreign exchange trading. Ask me anything you want, my friend. I'm here to help. Oh, thank you, Miles. I appreciate that. Yeah, all right. Yeah, you shouldn't see pictures of hurricane because that is so 2 hours ago. Okay, so just an update. We never did breach 76 on the Kiwi yen. CAD yen still looks really good with the improved exporting numbers out of Canada. Remember, we got better than expected exports out of Canada. So Canadian dollar is strong at the same time that the USD is weak. So CAD yen is strong because CAD is strong and yen is weak. But USD CAD is straight down because dollar is weak but CAD is strong. And it finally did kind of tickle its way through the weekly central, but not by much. Those are high risk pips. Okay, boom, 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 boom. So, hey, moderator, can you help people out? It seems like people are watching recordings of me. Oh, there you go. Okay. So for those that are with me live, I'm open to questions. What do you want me to talk about? I'll talk about anything you want. We were talking about negative interest rates and how they impact gold demand for gold. So hopefully you got that. And also as another test, I want to see how many people can actually hear me live. Can you type in whoop whoop? If you can actually hear me, type in whoop whoop. Oh, Georgie's got a whoop whoop. All right. Happy Robot, we're nowhere near needing to stock canned goods. Nowhere near that. Not in my part of the world anyways. Okay, good. There is a delay in the but I can deal with that, I suppose. Assume rate hike in December. Usually when people start... Oh, when will people front run that? How about after Thanksgiving? How about just before non-farm payrolls? Is London more choppy than New York?
3 minutes at the quarter hour. We'll get the August ISM for New York. No consensus prior.
When I hear that and then I see people trade it, they're reacting to London. So they see some green candles and they're like, oh, I guess it's up today. And then they buy it. And then it drops and they're like, man, this is choppy. That's usually the case when you're looking for London to tell you what to do. It's not choppy if you already have a plan and you're like, I hope it goes up to resistance so I can sell it, right? Because then you don't chase the green candle. You're simply waiting to sell. Or vice versa. You're waiting to buy, and maybe it goes up and up and up and never comes back and you don't get to buy it. It doesn't seem choppy to you. So it's usually choppy means you bought it when there were green candles and then it turned red, and then you sold it on red candles and then it turned green. And to that person it would seem terribly choppy and they'd complain about whipsaws, but it's usually because there was no, malice aforethought, so to speak. So choppy to me is usually a point of view. Okay? So like when I'm trading, for example, let's open up this chart. And let me change the template. So let's say I'm trading the London Open template. I'll use something like this. Okay? And if I was a bull, you can see I've already identified the 3A2, the 618, 382, 50%, 618 of the previous day's range. Okay? So looking at what happened last week, and I don't have a drawing tool anymore, but here's the low of yesterday's low. Here's yesterday's high. Can you see that? So my trade plan today would have been something like down into the red zone and then up. Because there's the low, there's the high, and there's the close. The day ended bullish. Now, I was in 10 trades long on euro dollar, right? How many people saw that? Well, there's similarities, right? To this, the low, the high, and the close. So I simply want to buy let's say a Fibonacci retracement, and then I'm looking at daily central pivot points around 132.30-ish, right? So that would be my general plan of attack here. Okay? You see that? And so what actually happened? It came down, hit the red zone, and went up like a rocket. Okay, someone else might say, oh, well, it went up for a while, then it came down, and then it didn't do anything all day, and then it went down, and then, then it spiked up, and it was choppy. But if you traded it on a 4-hour chart, it just simply did what it was supposed to do. Up, 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 up. Right, so now I got to realign this. Okay, up, 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 up. Down, made a 3A2 Fibonacci retracement, so it actually did this, right? And went up. Well, isn't that what it was supposed to do? But to somebody else, it could be like terribly choppy. Oh, it went up and it went down and it went up and it down. It was choppy. Or it wasn't choppy. Depends on your point of view, right? So I guess to directly answer your question, no, I don't think London's choppy. I think there's a London fake out. I think you can get faked out by chasing green candles and then watching the whole thing turn red. And you're scratching your head like, well, then why were there a bunch of green candles if the market wanted to fall? Well, because it wasn't at resistance yet. But the market was waiting to sell it at resistance. All right? So I don't know if that's your case to the person who asked, but very often that is the case when I'm talking to a non-professional trader. I say, what's your plan? They're like, my plan is to watch the London Open and try to figure it out. well, then you've already lost. If not today, then probably tomorrow or next week or next month. But your strategy's flawed right off the beginning, and you will lose. You might get in that situation where it takes you 3 months to lose all your money instead of 1 month, and you'll say, wow, I'm getting a lot better. Linda says up to 31. Oh, you mean on the 30? So on the 31st, went up to 77.50. Well, I'll tell. Okay, well, all right. Let's talk Aussie yen then. All right, let's talk Aussie yen. You want to talk Aussie yen? I got the Aussie yen for you right here, huh? All right. Let's Aussie yen. All right. I gotta get. Okay. So first of all, Aussie yen made a 786 and bounced. So on the long time frame, you can see here, guys, that my trade plan was to wait for a double bottom, get the higher high, get the retracement somewhere around the 618 and long it. And I'm long. Oh, there's that profit again. I got an EA running. Is it this one? Oh, that's so dangerous. Remove EA. That's twice. I've deleted this twice. I don't want to get out of this trade. Cancel, take profit. Damn, it keeps coming up. Let me double check. I don't have any others on this. Ah, there's another one here. Golly. Remove. Whew. All right. Anyways, so there's the general plan, right? You can see it came down, made a 786. So based on 786, it should at least go to like 81. And then maybe wimp out. Okay? So there's that. That's going to influence my frame of mind, right? Okay. So go on to a smaller time frame here, like a daily chart or a day chart. Let's go 4 hours. So you were talking about the last day of the month, which is the beginning of the week, right? All right. So if you look at last week, we bottomed out at the support pivot. No, it's just those stupid I use EAs to ensure that every time I make a trade, I have a stop and a loss. But on carry trades, did it come back? It came back again, didn't it? Cancel, take profit. Who keeps putting the profit in there? I don't want to take profit. Wait for it. All right, I don't see it. So anyways, last week set up on the weekly support pivot. Okay? So that may make you bullish. Now, I was already a bull. Okay, fine. So now looking at this week, we open up this week, and if you're a bull, your buy zones for the pivot point is somewhere between the weekly central and the M2. Correct? Correct. Okay. Now you're talking specifically yesterday, and I think what you're talking about is a moo trade. Now what you might have seen, okay, is that price came up, broke out of the pivot profit zone, retraced back, and this might have gotten bouncy or choppy in the London session. London was here. So London went up, London went down. I think this is what you're talking about, right? Or is that the first? Oh, so you want the other month, other day. Oh, well, very similar. London went up. No, okay, no. no, even then. Even then. Let me get my drawing tool. It's just easier. Hang on. Un momento, por favor. It's just easier to have a good drawing tool. Delete. Okay. So why was it choppy, as you said? Because you were trading London at the pivot profit zone. Okay? Even though this is where I'm long, it's not a good trade to be in. I bought it probably off of something a little more complicated, like because the choppiness told me something. But that's a little different. But to be honest, I think I bought it here. Yeah, you know what? I think I bought it there anyways, so there's something different going on there. So that particular day you're talking about the choppiness is you were trading London at a place that you shouldn't be trading it. Yeah, I think what I did is we got through this, it broke out in New York, pulled back in Asia, and I longed it here and I went to bed. And it went up and it came down a little more. I was already sleeping. And then it came back and, you know, I've been profitable ever since. But that was a good trade. That was a logical, intelligent trade. So, again, going back to the choppiness, is London choppier? And you gave this specific example of London on the 31st of August. And it was because you were buying into a pivot profit zone and you shouldn't have been. This area here on that particular day is a profit-taking day. Completely predictable and understandable. Okay, so is London choppier? No. Are daily pivots important to London? Well, yeah, why wouldn't they be? Okay, I use right here what you're looking at is daily and weekly pivots. Okay, daily R2, daily R1, daily support 2, daily support 1, okay? Monthly pivots, okay? I'm looking at yesterday's high. I'm looking at yesterday's low. I'm looking at the sweet spot Fibonacci area, okay? But most importantly, before all of this, before any of this, guys, before any of this, the plan was to be long. And bear in mind, the plan was to be long 6 months ago, 8 months ago, 9 months ago. So again, is it choppy? Not to me. To me, it's smooth as a baby's bottom. Yeah, so Linda says sometimes daily pivot points can be sort of ignored. Well, I wouldn't say ignored, but overwhelmed by a longer time frame. So, for example, you wouldn't use daily pivots on your daily chart. You wouldn't use daily pivots on your 4-hour chart. Those are where weeklies live. Like weekly pivots, for example. And I'm also using monthly pivots. So, like, is your weekly M2, or sorry, your daily M2 more important than my weekly M2? No, of course not. So what you end up needing to do is look for clusters. So let me change the template here from, that's just my day trading scalping template. Change templates here and we can look at clusters. Clean that up. Okay. And now I'm looking for weekly and monthly clusters. Right? So here's a cluster of weekly, monthly. Here's a cluster of weekly, monthly. Here's a cluster of weekly, monthly. And there's nothing really on the upside. Okay? Okay. So when you get up here, because it's a moo trade, and by moo trade I mean, what do you do when you break through the extreme target? So This area right here, the upper part of the red zone, is the extreme predicted high for the week. So on Monday, I assumed we were going here. Okay? It's just pivot points. It's no big deal. But what do you do when you get through the extreme? Well, obviously you switch over to using monthlies. But the same, and this isn't particularly important when it comes to daily pivots. In daily pivots, the question is, Wayne, what happens when you break through the pivot profit zone? What do you do the rest of the day? And I say, in this case, stay long until the cows come home. And when do the cows come home to bed down for the evening? At night, at the end of the day. Okay. On weeklies, you just switch over and use monthlies as the target. Okay. But the thing is, when you're up here, this whole area up here, the one thing you for sure know is not to short. So I bet you most of the people in this webinar are pretty good traders, but they give a lot of their profits away because they're counter trend trading. And I only do it in very, very, very specific situations. You might do it because you say, hey man, it can't go any higher. Oh really? It can't get any higher, huh? So when I'm in this situation, all I know is I will not sell it. There's nothing you could possibly do to make me sell this. At least psychologically. Okay? Good questions, though. Thank you very much for participating, guys. I really appreciate it. That's why I'm here, honestly. Right, I haven't sold you anything today, have I? All I've asked you to do is open up a demo account at Trader's Way. So go to tradersway.com, open a demo account. Ask another question. I hope you found that satisfying and rewarding as much as I did. If you want, we can change this. Okay. So using pivot point theory, guys, using daily pivot points, you're supposed to buy somewhere between the central pivot and the M2 if you're a bear. I mean a bull. And you'll see you could have bought it in Asia and been done for the whole day. Your target for the day, 78.50. Oh, I missed your question. Can you also say something about pound Oz? No. July factory order is 1.9. You're asking me to confirm or deny your trade. No. All right, I'm not your financial advisor. But if you want to talk about technical or fundamental analysis regarding the pound or the Aussie, yeah, but I'm not going to confirm whether your idea was good or not. No way. It's not my problem. But we can talk about the analysis, right? But like, for example, the pound is strong right now and the Aussie is strong right now. I don't even understand why you'd be interested in the pound Aussie. Doesn't make any sense to me. So maybe that answers your question indirectly. Why would you trade two currencies that are both strong? I don't get it. The time frame will show it's in a range. Well, of course it's in a range. You see what I mean? of course it's in a range. They're both strong. Why would they not be in a range? But why would you want to trade the range? There'd be no follow-through. You want follow-through. You're supposed to pair up strong versus weak, right? So you can see I'm up 100 pips on the Aussie yen. I'm up like 300 pips on the Kiwi yen. I have no problems with that because those are the two highest yielding currency pairs in the world, within reason, right? So that makes sense to me. So it has a huge run higher, maybe, right? Well, you're expecting either the Aussie to collapse or the pound to collapse, or the pound to skyrocket in value. Or no, wait, no, say it again. Has it? Oh my God! Here we go. Here we go, Linda. By the way, I hope you're not put off by the banter, right? We're just two traders, right? So I'm being quite frank with you. But you know, if we were in person, I suppose I wouldn't be speaking so frankly. So I should be careful. Doji on monthly chart. I couldn't care less about the doji on a monthly chart. The monthly chart has nothing to do with fundamental analysis. Nothing. It's too much time. All you're doing is looking at price time data going back so long that you're trading your grandfather's Deutschmark. You know what I mean? Well, if you look at the resistance level from 1992, and did you see the 200 EMA on the decade chart? Like it's not relevant anymore. Okay, you're getting way too caught up in technical analysis. By the way, I love technical analysis. Okay? But I want you to understand that your weekly chart does not create a trade. Fundamental analysis creates a trade. Today's move happens because of what people think the Fed will or will not do on September 21st. Or what may or may not happen in December, in the February-March meeting, and so on and so forth. What will the Bank of Japan do? What will the Bank of England do? What will the ECB do? How about the RBA? Are they done? How about the Kiwi? What's dairy prices? What are gold prices? What's the supply of oil going to be like? What about the OPEC meeting? If the demand curve is not going to shift to the right, how can we shift the supply curve to the left? And so on and so forth. These are the questions. What makes money move around the world is the question you should be asking. What will make global economics improve? What will make global macroeconomics not improve? How's the business cycle? What's the investment cycle? This is what it comes down to. Your monthly doji, I'm sure you read a good book somewhere about that. I'm sure maybe you spent $2,000 on a weekend course that told you all about the monthly doji, and it's just not worth $5. Why not? Monthly support, blah, 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 blah. Okay, so now you're saying for April 2016. Well, that's different. You're using monthly and you're going back 5 candles. Well, why would you use monthly for that? You should probably be using a daily chart. So I don't use weekly charts. I don't use monthly charts because it doesn't encapsulate the future. You're looking so far back in the past that institutional investors are just not making the same decisions as you are. Literally, when we look at the VIX, they don't give two hoots about your monthly doji. When we're looking at the Fed funds futures market for institutional cash investors, They don't give two hoots about your monthly doji. What they're looking at is what risks and opportunities are impacting, in the near future. What are the risks of the near future that could impact me today? That's different than looking at big monthly technical charts. It doesn't tell you the central banking policy of Australia in 3 months. It just doesn't. So I'm okay with the support and resistance idea, but you don't need a monthly for that. So you're asking me my opinion, and I think I'm being pretty clear because I'm very opinionated, but I'm a currency trader. How could you possibly be wishy-washy as a currency trader, right? Oh, I don't know, it might go up. Oh, I don't know, it might go down. So I'm very vocal. I'm an A-type, in-your-face person but I'm kind-hearted and I'm caring. But I'm opinionated because I've done a lot of work, right? I study a lot of things. So I come out with an opinion, and then that shapes the way that I trade. I know what I want to do, and I do it. And that works for me, right? So a chart to me, a long-term chart to me, is the daily chart. And I see support and resistance here. And I can throw down another one up in here if I wanted to, okay? Which is fine. It's all good, right? Okay? And these levels are important to me. I tend not to use trend lines because they're very subjective. Okay, like maybe you draw your trend line like that or something, right? And okay, I don't know. There we go. So maybe you draw your trend line like that. Maybe you don't. See, I don't use them. I use these horizontal ones. And then I do things like I start overlapping. Okay? So let's overlap some pivot points. This is daily. So let's do some monthly pivot points, right? Weekly and monthly. Okay, zoom in now. Okay, and I start making decisions. I know this is cluttered. This isn't my typical view. Grid, kill the grid. And now maybe, so now I know where my support and resistance is based on price action, but also based on market forces. That's what pivots are. And I start looking at clusters of these things. So I can see, just by chance maybe, or maybe not by chance, that there's a lot going on in here. Oops. And maybe I use this information. Oh, come on, drawing tool. There we go. And, okay, there's a lot going on in here around 79.50. So maybe up there, that's where I start. Okay, that's fine. But going out farther than that, here, let's go back. Let's get rid of the pivots now. Scan. Just scan. Let's do the scan here. Going out to monthly. Okay, monthly here doesn't do it for me. Okay, why is USD so hard long? Because I told you 6 months ago, Linda, that it would be. I don't have a better answer than that, except it's supposed to have. Right? Honestly, 6 months ago, I was absolutely ridiculously clear, specifically which week you should do it. So the reason it went up was because it was supposed to go up. Also, it went up because of what was said at Jackson Hole. And it went up because exactly what it was supposed to. The fundamentals said it should. What Janet Yellen told us at the Jackson Hole meeting Friday when it skyrocketed from 100 to 102, which is like 3 average daily ranges all added to about 2 hours of price action. It went up because the fundamentals told us. What she had told us increased the probability of an interest rate hike in September. And then if you looked at the Fed Fund futures market, they priced in a rate hike in the open market price of money at the institutional level because of what Janet Yellen said. Had nothing to do with whatever you saw on your USD yen monthly chart or even weekly chart. It didn't go up because of that. It honestly didn't. You didn't even need a chart to know that. Okay? But if you saw something on there, that's a great coincidence. But, you know, seeing support at 100.0000, I mean, that's not difficult either, right? Well, okay, so yeah, so Lyndon says, okay, but it didn't get us a 382. That's right. Do you know why? Because it's based on an expected change in central banking policy. It was not a technical trade. Now, a technical trade is where, you know, news comes out, because remember, news trade is not a fundamental trade. It comes up, people take profit, it comes down, and people do it again, right? Well, an institutional trader doesn't do that way. An institutional trader does not scalp the news for 35 pips. So when Janet Yellen said, we're going to jack up interest rates over the next couple of years, here's what happens. Tsunami. And it's a one-way street, man. That's it. Not a technical trade, fundamental trade. Okay? ISM bad? Okay, that's bad, and then it does this, and then, you know, you can do whatever you want, right? A fundamental change or an assumed fundamental change in central banking policy is a fundamental move. There is no pullback. Okay? So we got to be very, very careful here. There is a difference between technical and fundamental trading. Right? And, you know, I know there are dozens of people that can absolutely, totally verify that in January we were buying the Japanese yen until the third week of August, and then we were going to sell the hell out of the Japanese yen. Why? Because I did it last year, and I did it the year before, and I did it the year before. It's based on seasonality. Seasonality. Did you know I'm going to sell the Japanese yen until either Thanksgiving or New Year's? I already know what I'm going to do in January. How awesome is that? So that's why I always kind of like, when I was saying before, when I see amateurs that trade London and they open their chart and they start looking at their charts for answers, like, please, technical analysis, tell me what to do. I honestly believe that you will lose as a trader. Now, I'm not talking about technical analysis not working. I'm simply telling you that technical analysis is a way to enter your trades at the proper price level. Okay? If you don't know what you're going to do in January, I'm already ahead of you. Do you understand that? Like, I know what I'm going to do in January. I know it. I could do a PowerPoint presentation about it, right? If you were my client, I'd sit down with you and say, all right, well, you have $3 million with me, and I appreciate you as a client. Right now, we're net short Japanese yen, and we're going to collect the income off of that, and hopefully the pips as well. And I think this should continue to work. And if things go well, we get we get some help from the Fed, the ECB, and the BOJ over the course of the next 6 months. And if we don't, we'll still do all right, and we'll be fine. Certainly better than your stock market portfolio. And then I'm going to dump that whole position. And let me tell you why and the factors, and in particular when. And I can sit down really calmly, explain what I'm going to do over the next 6 months in great detail. Now, do you think I have an advantage over someone that opens their chart looking for answers? I would say I do. Now, am I always right? Of course not. That would be silly. But I know how to manage my risk if I have a strategy and a bias. And my strategy and bias comes from analysis of the fundamentals of macroeconomics and central banking policy. And when I read meeting minutes and when I listen to speeches and when I download spreadsheets and PowerPoint presentations from the central bankers themselves, I'm using this information to develop my fundamental strategy. Remember my book, Strategic and Tactical Forex Trading. I always start with a strategy, with a bias in mind. Because at least I know when I'm wrong. Because I'm like, what the heck's going on here, right? But I should be surprised that I'm wrong. Like, why is the Aussie yen going up? Well, because it's supposed to. I'm not shocked by it at all. Not even in the slightest. And remember how weak the Kiwi was? They were slashing interest rates. It went up the third week of August. Why? Because I said it would. Now, okay, maybe that makes me an egotistical maniac, or maybe I just did a lot of really, really hard work. Like, I describe a basic requirement of being a Forex trader, and that is having ridiculous, sickening work ethic. And because of my ridiculous, sickening work ethic, I said it was going to go up, and therefore it did. It didn't surprise me, not even the why it went up, when it went up, all that stuff. It went up because I said it would. Because I'm a genius. I'm a supermodel too, which is really rare. But I'm working on that humble stuff. I'll get that. Don't worry about it. Right? It went up because I did my analysis. Now, the technical analysis is another part of this, right? You know what I mean? Then I take my technical analysis. And by the way, somebody told me, and I'm a work. How do you say it? Not a workaholic. I'm a perfectionist. No, that's not quite right. I don't know. I'm just stubborn. How about that? Somebody told me I can't trade the 1 minute chart. You can't trade the 1 minute chart. It's just noise. And he's like, and I thought to myself, it's true. I can't trade the 1 minute chart. But I'm really good at the 5 minute chart. So I traded the 1 minute chart for a year. I'm awesome at the 1 minute chart. Why? Because I'm an egotistical maniac? No, because I work really, 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 really hard for a very, very, very long time. And I got some skills. And I'm confident in my skills. Because I think you need to be confident as a trader. Now, obviously, I'm exaggerating for effect. Obviously, I hope I'm not an egotistical maniac. I think if you know me, you'll know it's not 100% true. It's a little bit true. Okay? But I'm not here because I'm an egotistical maniac. I'm trying to get a very complicated message across in a very short amount of time. I'm hoping to have a positive impact on your trading career. And so I'm slapping you across the face so that you can hear me and listen, right? So anyways, going back, I've done hard work. I've done the analysis. I have an opinion. And as a professional, it's my job to carry out my opinion and manage the risk in case I'm wrong. But at least I know when I'm wrong because I'm not like looking to the charts for answers. I'm the one that has answers. People pay me money because I have answers. Not because I look at the charts and say, oh my God, wow, did you see that 5-8 cross? Did you see that monthly doji? I knew that monthly doji was going to be there a year ago. That's more what people pay you for. And then you say, well, and let me give you 5 reasons why. And those reasons just blow you away. You're like, oh my God, I could never have done that type of analysis. Here you go, Wayne, trade my money. All right. All right. So anyway, so I got this bias. I can explain it in an intelligent, logical fashion. And I'm thinking not minutes ahead, but hours, days, weeks, even months ahead. Then I carry out that bias, but I use technical analysis. And I start dropping into smaller time frames. Right? Because the technical analysis says, all right, in this case, we want to buy dips. Well, how do I know I want to buy dips? Because I did my fundamental analysis. Okay? The technical analysis puts you in the trade. So, going on the methodology that I teach, this is when the market turned bullish. You understand that? Before then, I wasn't trading this. Because that's how I define that the market is technically bullish. But you understand, 4 or 5 months ago, if you were hanging with me, and I mean almost every day, I pointed out, the 3rd week of August, I'm going to start looking to buy the Aussie yen as soon as it shows that it's turned bullish. Okay? Well, technically, this is when it turned bullish. So now what do I do? Using technical analysis. Up, 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 down, down, buy. 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 Up, 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 up. What is the difficulty? The difficulty is you didn't do the longer term analysis and you had no idea it was going up. And by the time you realized it was going up, it was too late because you were like, oh, well, Wayne, there's resistance here. Oh, and then Wayne, there's resistance here. And then, oh, it can't possibly go any higher than this, so I'm going to short it. And you're shorting in a bullish market, and you're going to lose. Why 3rd week? That's my alpha, Linda. Because I've been sitting here for 13 years, and I've developed an opinion based on my experience. Okay? So Linda, in 13 years, after spending 10 to 12 hours a day, plus weekends, plus learning fundamental analysis. Remember, I passed the Series 3. I've been doing Forex so long, I'm exempt on the Series 34 because I'm grandfathered in, because I'm older than the test. How crazy is that? Right? I'm studying finance at Harvard in an elite graduate program. I'm a 40-something-year-old college student. But there is no limit to what I will do to succeed, except things that are unethical. There's a limit, obviously, right? But my basic entry-level requirement to this job is a sickening, ridiculous work ethic. And what's interesting after that, it gets pretty easy. So I hope that kind of explains how to put together like a Forex trading career. Your monthly chart doesn't have answers. All right? But download the meeting minutes. Well, which meeting minutes? How about the Fed? How about the Bank of England? How about the Bank of Canada? How about the Reserve Bank of Australia, the Reserve Bank of New Zealand? How about the European Central Bank? How about the Bank of Japan? Did you know I download Bank of Japan spreadsheets that are labeled in Japanese and I try to figure them out? Because the Bank of Japan will track how many domestic bonds domestic banks own, but how many foreign bonds that domestic banks own, and whether they're selling those assets or buying more assets. Holy smokes. Yeah, we just breached 104. Whoop, whoop. Yes, Central Bank of Mexico. Karstens is the head of the Bank of Mexico. And I download his PowerPoint presentations. They're in Spanish, and I don't speak Spanish, but I skip ahead to where it says, Inflaciono. Mucho inflaciono 2018. Oh. And there's a giant arrow that goes to the up and to the right. And I'm like, wow, okay, I get that. I guess they think inflation's going to increase in the next couple of years. Okay? So, I love you. I care about you. I want you to succeed. And then, when you're confident in your new developed understanding of how the foreign exchange market works and how to then implement your technical analysis strategy to carry out your fundamental bias, and you're ready to trade real money, I would like you to open up a live trading account at tradersway.com, and we will be the prime broker to your successful Forex trading business. That's my sales pitch. Hopefully you can start today as you're learning by opening up a demo account. Thank you for attending today's webinar. Thank you to FX Street for being wonderful hosts, and thank you for our sponsors and our supporters. We appreciate you. And thank you for asking really good questions, guys. And, you know, I've been in a bad mood the last couple of days, so if I came across pissy, I really apologize. But I hope you did enjoy the webinar and learn something new. And I don't know, my yen pairs are way up, so I'm super happy. A little bit richer over the last 3 hours. Where can you follow me? Open up an account at tradersway.com. And we'll get to know each other real nice. Okay? And so make a decision, guys. Remember, you're either a bull, a bear, or a pig. And what happens to pigs? Pigs get slaughtered. So peace on earth. May the pips be with you. May our profits be above average. Thank you to our moderators. Thank you very much. There's no moderators like FX Street. Moderators like no moderators I know. Oh, snap. That just happened. Peace on earth. May the pips be with you. May our profits be above average. No, spank you very much. Thank you, guys. Bacon. The first NFP perfect storm? I don't know about that. So yeah, so I got to start reading John Locke and Adam Smith and Karl Marx today. Got lots of reading to do. Milton Friedman, Noam Chomsky. Tons of reading, man. Yes, tradersway.com. Thank you. I do a lot of stuff for clients, so if you want to become best friends, that's the way to do it. And once again, guys, if I hope I wasn't too rough on you in my answers. It's a brokerage firm. Of course it's a brokerage firm. Mao Zedong. I don't know. Yeah, Karl Marx, yeah. Classes. Yeah, that worked really well for the Soviet Union, Communist China, Cuba, Venezuela. They're all really good examples. How much better Eastern Germany was from Western Germany, you know? Just proves the value of Marxist socialism. Everyone should lose equally, except for those that are super powerful enough to, you know, have you killed if they want to. I was hoping Euro would have gone up a little higher. I wanted to sell it at like 13 or 14 or 15, but flipped on the weekly central. Really? That's it? Hey, there's my homies in Venezuela. Yeah. Looks hot. Everyone's wearing hats. Well, we're back below the daily 21, so that's good. I don't mind selling the heck out of Euro at all. I have no problems with that. Beautiful. The CAD yen is just ripping it. Good job. I shied away from buying it just yesterday or the day before. Shoot. Alright guys, guess time to pull the plug, huh? No, Miles, it's probably the ECB weakening the euro. If the Fed's not going to do it, then the ECB needs to do it. So, like, the other day we're up there, and I told you we're in the European no-fly zone, that the European Central Bank was going to weaken the euro, and the euro USD dropped. Quite a coincidence. They need to do something. Anyways, peace on earth, may the pips be with you, may our profits be above average.